Hello, good day, and welcome to Davidson World once again. Um, Today I'm going to be talking on a particular question that was asked by one of my subscribers on this very YouTube channel. The question that I was asked was, how do you know where a trade would pull back to after a resistance or a support is broken? How do you know where a trade would pull back to when a support or a resistance is broken? So when I heard that, when I read that message, I was glad and was happy that it means that I'm not just talking, I'm not just doing this video for doing sake. People are actually following up and I'm being encouraged to give answers, and I'm glad and I'm privileged to give answers to that very question that was asked in the comment section. I want you to understand something. I'm going to be using this GBP USD as my example, or for my example, that GBP USD or gold USD. Okay, let me use gold for example. Okay, let me use GBP USD because GBP USD confirms exactly the exact question that he actually asked. Okay, now let's go further. For example, how do you know where a trade would pull back to after a resistance or support is broken? The first thing I will say to that question is it depends. It depends on the time frame you are looking at. You understand? It depends on the time frame you are looking at. So whatever time frame you are looking at, the answer to that question is as simple as ABC. It's as simple as ABC. Let's take for example, let me take this place as my previous resistance. Okay, let me take this area as my previous resistance here, as my previous resistance. So you would observe that a daily candle broke. This was a daily candle that broke this place. This was a daily candle that broke this place. So how do you know after this resistance was broken where the market was going to pull back to? How do you know where the market was going to pull back? How do you know, or how did we know that it was going to come all the way down to this place? It's as simple like this. This is it. All you just have to do is to pick your Fibonacci. This place is a level. Just draw this Fibonacci all the way from here to this place. It's as simple as ABC. This was the candle that closed, right? This was the very candle that closed. So upon closing here, this daily candle closed here. So what happened next was, all you just have to, if you go to 4-hour time frame, you will notice that this place is actually a support level. Let's go, a minor support level. Let's go back to our 4-hour. This is exactly what it is. This is exactly what it is. So if you actually expand it, you will notice that it actually covers up for this whole of this area. You see support, support, support. See how market tested this place. So that was why this daily candle had to react the way it actually did here. Okay, now let me take you back to that 4-hour. Since 4-hour has many of the support touches. Now look at it. I drew my Fibonacci all the way from here to this place. So this was the daily that closed. So when that day closed, there was a further push to this up. There was a further push to this upside. When that daily candle that broke out closed, there was a further, the following morning it came to test here, then it came back up here, then a further push happened to this place. You understand? So what you would do is just to make the correction here, draw this fib to this place, to this high. Low, high, immediate low, immediate high. You get it now? So this place would be the area you would be waiting for the market to come test again. Here is where you would be waiting for the market to come test again. Okay, eventually, now let me not take it further with another example. Let me delete this Fibonacci first. If you go further now to this daily, this was what happened. Then when it took off, a break off happened to the upside. All right, then this place became the immediate support and immediate high. Then I drew a Fibonacci all the way from here to this place. I expected this support, this pullback to happen all the way to this place, and it happened. Then, upon happening, a 4-hour double bottom would be expected. Watch the other time video on entry and exit pattern, on entry and exit strategy. So a base was formed here on the 4-hour. Let's go to the 4-hour time frame now. You will see that a base was actually formed here on this 4-hour. Then it took off, but it came back again to test, because we actually found this place as a major resistance area before now. We thought when it took off there, it was going to come here. Actually, I expected a pure daily candle to come break below, but unfortunately, it didn't come break below at all. So a base was found here, then it came up here. Before it came down, a base was also found at the top. It came back down to this support before it finally took off. Now it's going back to the upside as we speak. It's going back to the upside as we speak. Okay, now another daily candle closed. Look at what happened. Look at what happened when it took off. When it took off from here, it continued. Remember, this is a resistance, right? Let me put it here. Let me put a trend line here. Let me put a trend line here. This is a resistance. All right, so it pulled back to this place on creating this new resistance. It came here, then it took off again. This candle tried its possible best. This candle tried to break out, but it came back to close in. So upon closing in, what happened is as simple as ABC. Upon closing in, all we just have to do next was to draw this Fibonacci to this high, then bring it to this low. This place formed our new low, and this place formed our new high. Then we expected the Fibonacci to come back to this low. Then let's go back to 4-hour time frame. So upon getting here, you see 50% Fibonacci level. When you are expecting the market to pull back, you expect the market to pull back to your 61.8 Fibonacci level. This is 61.8. This is 50. This is 50%. This is 50%. This is 61.8%. So it should pull back into the area. So on Monday, this candle, that long candle that came to that daily long candle that created a long wick, came to close here. Then this red candle was formed on 4-hour. Then I didn't expect it to just go up like this. So I expected it to form a stronger base here. But unfortunately, it came back up. I didn't do anything. It came back down again to come test the same support Fibonacci level. So when it gave me my entry pattern here on the 15 minutes, that was when I entered. So this was exactly what I did. This was exactly what I did. This place would have been good for entry when this guy broke. This place would have been good for entry, but I just wanted a better confirmation. That's why I had to wait for this guy to be taken out totally. So when it got taken out, an entry was made. I'm currently in this trade, so I pray it continues back to this up. The gold trade I entered this afternoon actually trapped me on the way, so I had to close. My stop loss was hit. Yes, my stop loss was hit. In the morning, I took sell on good too in the morning, but unfortunately, it didn't move that much. I closed when it was in profit, and I thought the further push to the downside, I will be making an entry, but unfortunately, it got me trapped. So it logged me out on a negative. Okay, now let's now go further. So I guess that question has been answered now. I guess that question has been answered. So all you just have to do for every daily candle break above a level, above support or resistance, all you just have to do is pick your Fibonacci, draw a Fibonacci from previous low to the current high if it's an uptrend. Then draw if it's a downside, draw it from previous high to the current low if it's on a downtrend. You understand? So that is how it works. And another thing that we should understand is that the time frame you're looking at also depends. Yes, also depends. Depends on the time frame you are watching out for your breakout or whatever. So whatever time frame you're looking at for your breakout, all you just have to do is go to the low of that time frame. Go to the low or the high of that time frame and draw your Fibonacci. Go to the previous level and the current level and draw your Fibonacci. Connect them together. Then wait for the market to pull back to your 61.8%. So that is just all about that. It's as simple as ABC. Just if, for example, you are looking out for a daily, once a resistance is broken like this, draw your fib from previous low to the current high. For example, let's assume it's a downtrend. All you just have to do a support. Let's assume this support is broken. All you just needed to do, if it's a downtrend, all you just needed to do is to draw this fib all the way from here, from this current high to the current low, immediate high, immediate low. Then you pull back to your 61.8% level. Then from there, you can start making your entry decisions. It has to form a base. It won't just get there and reverse. No, it will have to form a base. So you give it time. You understand? Maybe a day. When you get there, you give it a day. So by the time you do that, then you definitely pull back to give you your entry strategy pattern. So that is how it goes. So if it's on the downside, this is what you do. If it's on an upside, you draw it from low to high. If it's an upside, you draw it from low to high. For example, this is the trade we are looking at. So you draw it from low to high. So for this trade that is currently on now, so when it happened the way it is, I had to draw this fib all the way. This is a high, so this is the low. So I waited for 50% Fibonacci to be pulled back into, and it actually pulled back into it. So it came into this place. Then when it came here, it gave me my entry setup and I made my entry. So I pray it comes back to this very high. So that is just all about it. Once this place is taken out now, it should come back to this place. Once this place is taken out, it should come back to this place. So that's just all about that one. I don't want this video to be too long. Please remember to subscribe to this video. Thank you very much for watching today's video. And also, there is something I want to quickly say. In this industry, every day is not Christmas. Every day is not Christmas. Don't compare yourself with anybody. Some people have huge account size that all they are looking for is just 10 pips. They have huge account size, all they are looking for is just 20 pips. Don't be intimidated by the time they are cashing out because they have the huge account size. You get what I'm saying? So with your little account size, you need to give yourself kudos. Give yourself kudos because you do make more than 20 pips. You do make more than 10 pips, more than 50 pips sometimes. So you need to salute yourself. You're doing really, really well. So as a result of that, all you should now be thinking of, keep planning with the way you're going. Just be planning with the level or with the level that you are currently. It's not a bad thing. You're doing really, really well. So that is all about that. And another thing is that once the major problem that we do have in this business is that sometimes we find it really very difficult to really know what the trend is saying. We find it difficult to even understand or to even identify what the trend is saying. And I've come to realize that once you can understand what your daily time frame is saying, once you can understand what your daily time frame is saying, then your problem is half solved. Let's take for example, now let me take you back to my gold that I love trading all the time. Okay, this is what gold is saying. Remember, over time we have said that when a market um that we are expecting a major pullback to this area, and the market has been testing this the whole of this area for about how many weeks now? Let me check the number of weeks. This is how many weeks now? You see, what, first week, second week, so third week. For complete 3 weeks now, this area has been consolidating. So when this happened, so what happened next was just a, please hold on. So so this is what it is. So this is what it is. This guy came, he did the whole of all this. It has been sustaining this place. Now Delhi has come to form a very strong base here. Delhi has come to form a very strong base here. So what is now happening now is that um Daily candle has come to close very green. So this is the neck. This is a daily neck. This is a daily neck. This is a daily neck. Alright. So I expected this guy to break here yesterday, but he couldn't. But that was not what this daily has come to close very bullish. So now that this trade is very bullish, this is what I have done this morning. When this daily candle closed, this is what I did. I just came down to a 4 hour to come pick my support, to come pick this support level, drop Fibonacci all the way from here to this very high. So this is a support. So this is the support. So this is the support level that gold has pulled back to currently. This is support level gold has pulled back to currently. So if this daily candle that is pulling back closes today, then by tomorrow I should expect a comeback to this place. So when it comes back, then I will be looking for a buying opportunity to this resistance again. Before, if it then breaks out while I'm in, that will be good for me. but this is where I'll be watching out for my TP. So that is just all about that. Thank you very much for watching today's video. I really want to thank you. Please remember to strike the subscribe button and share this video so that people who are interested can also take part in getting this whole idea. And also remember to share your opinion, what you think we should do next. Please just say it in the comment section, then we'll know what to do. So if this video actually clarifies your question, please do let me know in the comment section as well. Thank you very much for watching today's video.